Welcome back to my channel. Today is gonna be a really short, concise video. This is more so just an update video. This video is directed to a more specific demographic of my audience because this is strictly to TD customers, and not only just TD customers, but TD credit card customers. If you don't have a TD credit card, I mean, you can just put a thumbs up on the video and send the video over to other people who you know that do have a credit card from TD, because this is more so directed to them. But I am gonna let you know about the different types of interest and the different effects that they have. So TD actually just issued out a statement that they are changing their interest policy starting in March, which is literally a month away. And I'm here to let you know because a lot of people are not even realizing that this is something that's taking place. As of right now, TD charges simple interest, and that's pretty much the norm amongst all credit card companies. TD feels the need to change their policy now, and they are now going to be charging compound interest on your credit cards. A lot of people are unaware of what exactly the difference is between the two types of interest calculating. So simple interest is you have a balance. Most people have a grace period of some sort where you're interest free. Like my credit cards, I have a 21-day interest free grace period. So if I spend $50 today and I pay $50 to my credit card within 3 weeks, then I don't get any interest charged on top of that $50 purchase. However, after that 21-day period, then they start to tack on interest, and they tack it on simply. Now TD is changing their policy, and they are going to be calculating interest on a compound level. So what that means is you're gonna be charged interest on top of interest. With the simple interest tactic, if you didn't make your payment within that 21-day period, the interest would be tacked on afterward. Let's say you racked up $10 in interest on top of your $50 balance, so now you owe $60. Now what TD is going to be doing is, if you don't pay off at least the interest during your previous billing period, now in your next one you're going to be getting interest tacked on to the total amount that you owe, not just the balance like you normally would. If you charge a $50 purchase onto your card and you incur $10 of interest, $60. The next period, if you still haven't paid it, it's another $10 added on. It's another $10 added on to your $60 balance, so it's $70 now. However, compound interest is interest on top of interest. So what they will do now is, if you have that same $50 purchase and you incur $10 of interest, the next period is not going to calculate off of $50 purchase anymore. It's going to calculate interest off of your $60 total balance as opposed to just the $50 that you had initially. Thievery. It might sound kind of minuscule, but I'm using a small number, and I also want you to realize that it's really just you digging yourself into a hole of interest. So now you're just gonna be paying off interest. You're not even gonna get to tackle the actual balance you had initially on your card. So it's just something I want you guys to be wary and mindful of, because you're just burning money at this point if you're just getting compound interest tacked on top of interest on top of other interest on top of more interest, and you're stuck. If you're someone who pays off your balance within that 21-day interest-free grace period, then you don't have anything to worry about anyways. If you're also someone who makes your payments and clears off more than the balance and interest incurred, so you're paying a lot more than just the minimum payment, then you're safe as well, because there will be nothing to compound interest on top of. Do what you gotta do to possibly combat it, evade it, because I don't wanna see you guys wasting money. Interest sucks. Interest is ugly. They're not changing the policy to help you. They're trying to trap you in a whirlwind of interest. So what I would urge anybody to do is to look into different alternatives, different solutions that you have available to you, which is looking at maybe balance transfers. If you've got a credit card with TD that you know you have racked up quite the balance with, and you are currently trying to combat interest as well as bring that balance down, and it's a struggle as is, you might want to look into the fact that, hey, let me get this balance up out of here, because now they're going to be tacking on interest on top of my balance plus the interest that I have owed currently. If you don't pay off all the interest that was just incurred and there's a little bit left over, guess what? That gets added to the snowball of the previous amount. And then they're going to tack on more interest the next month. And then no more interest, and then more interest, and then more interest. And then you're stuck. So make sure you do the right thing and figure out what works for you. if you got to transfer that balance over to another credit product, maybe you want to pay it off with a line of credit, maybe you want to pay it off with another credit card from another institution, because only TD is doing this right now. And you need to use this to your advantage. If TD is the only institution doing this right now, explore your options and look elsewhere, because I kind of have this fear that, you know, if TD does this and they don't lose a big enough chunk of their customer base, then other banks will follow suit, because they'll see TD thriving off of a tactic that didn't drive away enough of their customer base, and they'll be like, you know what? We could do it too. So that's the scary thing about this. It could really get ugly out here. And I don't know about y'all, but I don't want to be a part of it. And I got credit card balances too, and I'm not trying to deal with that. So you should do what I'm trying to do, which is look into my other options, get this balance that I have with TD demolished, because y'all not about to earn compound interest off of me. Not me. Not today. So with that being said, look into your other options, and I'm gonna be here to help you guys. We got a lot more attention span segments coming up. We got a lot more story times too. We got a lot more vlogs, and like you see me here, more Cheapskate Chronicles to help you guys maximize your financial literacy and your financial status. So make sure you subscribe, make sure you like, make sure you share this video to others. Even if you don't bank with TD and this was still useful to you, and you know people that could also benefit from knowing this knowledge, share this video, let them know, because the more that we all know together, the better we stand a chance against these powerhouse institutions that are just trying to finesse us out of more money. So stay subscribed, stay tuned, and I'm gonna see you guys soon.